All right, let's talk taxes. I know, just hearing the word can be a little overwhelming, but stick with me. Today, we're going to cut through all the confusion and break down the big updates for the 2025 tax season, straight from the official guide, IRS Publication 17. Our goal? Make it simple, clear, and a whole lot less stressful. Yeah, if you get that little knot in your stomach every time April rolls around, you are definitely not alone. It feels like the rules are always changing, and honestly, it's a lot to keep up with. But you know what the best antidote to stress is? Being prepared. So let's get you ready. Okay, let's dive right into the good stuff. First up, the question on everyone's mind. What's actually different for the 2025 tax year? And listen, we're not talking about tiny little tweaks here. The IRS has made some really significant changes for 2025, and these could have a real measurable impact on your tax return. You know, how much you owe, or even better, how much you get back. So first off, some really good news. The standard deduction, that's the amount you get to subtract from your income right off the bat, no questions asked, well, it's gone up for everybody. It doesn't matter if you're single, married, or a head of household. This bump means more of your hard-earned money is protected from taxes from the get-go. Now this is a huge deal for 2025. There are 4 brand new deductions on the table. And here's the best part. You can claim these even if you take the standard deduction. We're talking about new tax breaks for tips, for overtime pay, for interest on certain new car loans, and an even better deduction for seniors. Each one has its own rules, of course, but they're absolutely worth looking into. Okay, for all you retirement savers out there, listen up. The amount you can put into your 401k or similar plans has been boosted to $23,500 for 2025. And if you're 50 or over, those catch-up contribution limits mean you can sock away even more on top of that. So, with all these changes in mind, let's actually take a step back and ask the most basic question of all. Do you even need to file a tax return in the first place? Let's figure that out. The requirement to file really just boils down to 3 things: your filing status, your age, and your gross income. So for example, if you're single and under 65, you generally only have to file if your income for the year was $15,750 or more. Just find your category on the chart to see what the magic number is for you. But here's a really important question. Just because the IRS says you don't have to file, does that mean you shouldn't? By not filing, you could literally be leaving money on the table. And here's exactly why you should think about it. If your employer took out any federal income tax from your paychecks, the only way to get that back if you're owed a refund is to file a return. Plus, and this is huge, you might be eligible for something called refundable credits, like the Earned Income Credit or the Additional Child Tax Credit. These are credits that can pay you cash back, even if you owe 0 in taxes. So not filing means you could be missing out on a check. All right, let's move on to the real engine of your tax return, understanding how your income and your deductions play together. So every single taxpayer gets to make a choice. You can take the super simple, one-size-fits-all standard deduction, or you can itemize, which means adding up a whole list of specific deductible expenses. The rule is dead simple. You calculate both, and you pick whichever one is bigger. That's how you get the best tax break. Okay, now we're getting to the most powerful weapon in your entire tax arsenal, credits. This is where you can make the biggest, most direct dent in your final tax bill. You know, this is something that trips a lot of people up, but it's so important to understand. A deduction is great. It lowers the amount of your income that gets taxed, but a credit is way better. It's a dollar-for-dollar reduction of the actual tax you owe. Think of it like a gift card you get to hand straight to the IRS. Let me make this crystal clear with an example. Say you're in the 22% tax bracket. A $1,000 deduction will save you about $220. Not bad. But a $1,000 credit, that saves you the full $1,000. See the difference? That's why credits are king. For 2025, a few key credits you'll want to have on your radar are the Additional Child Tax Credit, which can be worth up to $1,700 per kid. And there's a big change to the Adoption Credit, which now makes up to $5,000 of it refundable. And of course, the Premium Tax Credit is still there to help out with healthcare costs. All right, we've covered the what and the why. So let's talk about the how. What are the actual practical steps you need to take to get this thing done? We can really boil the whole process down to 3 simple steps. First, get all your papers in order. Your W-2s from work, any 1099s for side gigs, that sort of thing.
Second, pick how you want to file. The IRS pretty much begs everyone to e-file because it's the fastest and most accurate way. And third, the easiest part. Just hit that submit button before the deadline.
And speaking of deadlines, go ahead and pull out your phone calendar. Tax day for your 2025 return is April 15th, 2026. If you know you're going to need more time, you can get an automatic extension to file by October 15th. But, and this is so important, remember it's an extension to file, not an extension to pay. Your payment is still due in April.
And there you have it, a quick flyover of the biggest changes for the 2025 tax year. I know it can feel like drinking from a fire hose, but when you break it down, piece by piece, it's so much more manageable. You can totally handle this. You've got this. So, I'll leave you with this to chew on. Now that you're armed with all this new info, from those brand new deductions to the awesome power of tax credits, what's one thing you're going to do differently this tax season to take charge of your finances?